How are you, folks? Enzo DiCasanzo, clinical professor, economics and finance in St. Peters, New Jersey City. And today we're going to be working on our continuing videos for the fall 2022 semester. And I wrote a list of what we're going to talk about today. We're going to talk about another Wall Street Journal article, federal income tax guide, and we're going to work on a problem that's going to be a homework problem or an assignment problem pretty soon. So okay, folks. So, our next Wall Street Journal article, the IRS revenue boost from stronger enforcement is scaled back by this Congressional Budget Office estimate. This came out recently. This was just before we started classes this semester. Okay. So Janet Yellen is the head of the Treasury. So by default, she's the head of the IRS or oversees the IRS. And she here, I mean, this is, I guess, a quote of hers to the IRS commissioner to not raise audit rates above historical levels for small businesses and households making under 400,000. Now, your first assignment, you had you graphed the number of enforcement personnel, the audit rates. You guys you basically recreated a Wall Street Journal graph, and a couple of you were sending me assignments that look good. So I appreciate the hard work the people are exerting already. So income limits on household tax audits and staffing challenges would be reduced by the 23 billion of what the Internal Revenue Service is projected to collect from its expanded enforcement operations, according to the Congressional Budget Office. I think I'm just trying to do it from guessing here, which is not the best way to do. I think the budget. We looked at the Obama years, and so that was some of your questions for that first assignment. I think some of the budgets were 10 billion or 12 billion. So, yeah, I mean, if there's more collection, out there, and again, we're looking at some of the projections here. 10-year funding from 200 billion to 180 billion. So you divide 200 billion by 10, it's around that 20 billion or so over a decade or something. It's a number that's in the ballpark. So it says the Congressional Budget Office revised an estimate Thursday in a letter issued by its director, adjusting the projected 10-year revenue generated by the nearly 80 billion spending increase included in the law that President Biden signed last week. The 10-year funding boost is now estimated to raise 180 billion, down from about 200 billion, according to the Congressional Budget Office. And I'll tell you, whenever the CBO says something, I generally, not I'm saying I 100% agree with it, but I'll put some faith in that because I know it's people like me doing it. So the Treasury Department officials have long said that real numbers would be far higher. A spokesman declined comment. Fine. Okay. So yeah, so what is it really that all the people who have the tax gap? What is the real tax gap? We're searching for that. Congress passed some IRS funding increases this month, but hasn't ended the debate over how the extra funding will be spent and the potential burden it could impose on middle income families. Republicans have been saying many American taxpayers who aren't tax cheats would suddenly face greater chances of time-consuming audits, while Democrats have said that expanded IRS will focus on corporations. And again, that's the popular Democratic Party line is, well, it's corporations, it's high-income individuals. But, you're facing very sophisticated people with all the money to hire attorneys and all the money to hire experts and video and, whatever. And a lot of this stuff is about valuation. What are we valuing this asset so the federal government can tax it? That's really, but those are generally the fights, and that could be tied up for years. And then if the federal government is losing these cases, why just spend 3 years fighting something and the government spent taxpayer money and there was no win, kind of a situation. Yellen tried to quell concerns earlier this month, directing the IRS not to raise audit rates above historical levels. So now you guys have some sense of the general population of people who make over $1 million, what those audit rates look like. And like I said, we're going to go specifically into what an audit is. We're going to get to that. So don't be concerned if you don't really know what sort of the textbook definition of an audit is. It says the restrictions will make the IRS less effective at policing the tax system. Well, it looks like there's been an effort. I mean, there were 25 something thousand agents, and now it was down to I think we computed in class. It was like a 40% decline. So that's a big drop. And folks, let me tell you something. And I've said this in class last year. I'll say it in class now. There's very little difference between the Democrats and the Republican Party. Very little difference. There's extremists on the right, and there's extremists on the left. Both parties have elements of, very, I don't say radical, but just, people who are way, way out there with a lot of ideas and a lot of concepts for things. But you're not getting a very different. You're not going to get different governance from Republican Democrat. Now it's going to be fashionable, allegedly, in 50 days to vote a bunch of Republicans in, but it always goes back to all politics are local. I was discussing with a relative of mine why we haven't seen, why we haven't seen what you're seeing in Los Angeles, what you're seeing in Chicago, why we're not seeing as much of that in New Jersey. And I think that we still have a bail system where it's effective as opposed to the New York City one, Philadelphia, Los Angeles, Chicago. There's an ineffective bail system in these places, which is unfortunate, right? Which is very unfortunate. It can use I'm saying it can use other law enforcement activities instead, but they may not be as productive, and developing ways of detecting non-compliance might take time. Um, yeah, I mean, look, you're not dealing with, okay, someone robbed an Exxon gas station. We have a video. The guy in the video looks like the guy we caught. We go to court with that. That's the criminal justice system, or something to that effect. This stuff is way there's 114 pages of instructions for the Form 1040 tax code. This is a way big different game. And do you have the fire? Does the government paying what seems like a lot of money, 80,000, 120,000, but does the government have the firepower to go against attorneys who are making millions of dollars when it's the government attorneys are making, $75,000, 120,000 or something like that? They're not making comparable private uh, industry amounts for being a tax attorney, and tax attorney is a completely specialized area. Any attorney you use, you should, if it's a marriage, if it's immigration, if it's contracts and corporate law, and even within corporate law there's breakdowns also. There's 10, 12 areas of law, and even with criminal, there's specific law firms that do just appeals and things of that nature. um it's got to be broken down. So certainly, if you're dealing with a tax issue, a federal tax code, you want a specific guy who's going to be able to do that. Uh, let's see. Yeah, it says the IRS can use other enforcement activities, but they may not be as productive. And again, the IRS is not going to be sitting outside your house saying, "Hey, did you pay your taxes?" Okay, it doesn't really operate that way. They got to be tipped off by somebody, or if there's just a data crunch on using it like an algorithm on the IRS or the Social Security's end, trying to detect what's a very likely tax cheat just through bank records, and that's you have to marry bank records with tax records, what's reported by a person versus what's in their bank account. And now you're starting, is it a privacy issue? There's a lot of things that are attached to this, and then we have a lot of case law that supports the government not going into your bank account and saying, hey, how much is in there, kind of a thing. So the constraint is compounded by late change in the hiring powers granted to the IRS. Earlier versions of the plan have given the agency more flexibility to accelerate the hiring. But even if you're, from what we're hearing, there's going to be a lot of people retiring from the IRS, and they're just replacing people who are leaving who may have 2 decades of experience, or even 3 decades of experience, with a new guy, St. Peter's graduate, right, who's just learning what's going on. It can take months to hire people. The candidates can look for another job somewhere. The final version lacked the changes because the standard procedure rules. So the CBO now projects the IRS will hire more slowly than it's been expected. So you can see things are getting walked back. There's a lot of walk back in this particular White House, in this particular federal government right now. The importance of higher pay, fast hiring authority to the IRS employees recruitment is the biggest takeaway from the CBO letter. Overall, despite Mrs. Yellen's directive, taxpayers making under 400,000 will still pay a small fraction of the new revenues gleaned from tougher enforcement, according to the Congressional Budget Office, which expects the IRS to focus on non-compliance by higher earners. Okay, we keep hearing that. Also, people over 400,000 were the only ones going to pay the new taxes. So this 400,000 threshold is just like a magical. It's got some sort of magical power for this particular White House. In addition, voluntary compliance is expected to increase for all taxpayers, according to the CBO. Taxpayers are more likely to comply with the law when they think they're. So I think this is the big takeaway from what's going on here. Stay in the call. This is the big takeaway that if you think you're going to get ordered, and again, there's that big spectrum, especially people haven't gone through it, of someone's going to show up at my house, and they're gonna come with a safe cracker, open my safe, and it's a letter, and if you answer the letter and say, hey, we'll cover this, we'll cover that, that'll be the sort of the beginning and the ending of it. You prove some of your itemized deductions or anything like that, or prove some of your income, and that it's important to have documentation for what's going on. That's an important piece of the puzzle. This is yet more evidence that the new law is a bad deal for the American people and will lead to more IRS audits and bury families under mountains of pain. Well, yeah, it's the specter of dealing with a legal issue. That's always sort of what's going on here, and it's a shame that it's that way. But the top Republican House Budget Committee, who said the historic audit rates target as a signal that the audits will increase. Well, who cited historic audit rates, but you guys, again, this Republican from, I guess, Missouri said, "Oh, there's historic," but we know from the data now, and unless there's new data for 2021, but the rates have declined for quite a while. So, and you guys know that, right? I mean, I think so. It looked like all that stuff was in dramatic decline. I don't have the graphs in front of us. Uh, Where was that? That was from last video, right? That was from the video before. Home. Yeah, this was it all was in decline, right? By dramatic decline. Okay, but that Republican senator said what he says up there. But hopefully he knew where. And again, I'm teaching you guys, where to get everything. So I don't know who Jason Smith is, but where to get the data to back up what you're saying. And it says Yellen instructions focus on audits, but not all IRS enforcement revenues come from audits. The agency can issue automated notices when documents don't match and send collections officers to get owed money without, beginning from all. Yeah, I mean, you're probably going to send them a check or something, right? And it says CBO reduces estimated tax for, yeah. So the moral to this particular Wall Street Journal piece was this part here, that you're looking at a decline in what the estimates were in terms of what the collection was going to be, that we're going to spend 80 billion, and what were we getting out of that, kind of a thing. Okay, so that's really what that was. So we're going to spend 80 billion, and then the fund is now estimated to raise, yeah, what you're raising from that. And I think what we had, this looks like about 2 to 1. We had 3 to 1 a little while ago. We're going to spend 20, get 60. I thought we saw that someplace. Okay, but that's really what we're talking about here. Okay, so again, so this article should be in your reading packet. Okay, so you should certainly look through this. I don't have the student. I didn't open up the student set of packets there, but again, we'll give you the assignments, and put all the readings that you need attached to the articles in the assignments. But there's a student reading packet. These should be slowly reading through a lot of that material. Oh, and sort of the star of what we're talking about today, the federal income tax guide. Okay, that's what we're here to talk. The federal income tax is a tax levied by the IRS on the annual earnings of individuals, corporations, trusts, and other legal entities. The federal income tax is applied to all forms of earnings that make up the taxpayer's taxable income. We're going to talk about taxable income in another video. Wages, salaries, commissions, bonuses, tips, investment income, certain types of unearned income. Unearned income is you get paid and you haven't provided the product or service yet. So in the U.S., federal income tax rates for individuals are progressive, meaning that as taxable income increases, so does the tax rate, and we'll see a mathematical example of that today. Okay, so that'll be like your second assignment. Will be the thing that we're going to talk about next. Is this will be your second assignment. So we'll do an example of that today, and says the federal tax rates change from 10% to 37%. I printed out, not printed out. I accessed the 2021 instructions for the 1040 form for single, married filing jointly, married filing separately, head of household, all the four tables that you needed for your tax brackets. And we already looked at this in class, but this is just another source of the same numbers. Okay. And we'll hit this next time. Next time we're gonna we're gonna work that problem out today. That'll be our third part of today's video is going to be that. Okay, we'll talk, and you guys have some experience with tax brackets, and we're going to discuss it even more. So as your taxable income increases, so does the tax rate also increases. All right, and what the ranges percentages range from, and apply the specific tax brackets, and the income that falls in the bracket is taxed at that rate. And we'll show you mathematically how it does that. I'm not spending a lot of time talking about the Tax Cuts and Jobs Act, but I will. That was passed into law in 2017, and we'll get to that. Federal income tax is the largest source of revenue for the U.S. government. Federal income tax is used for various expenses ranging from building and repairing the country's infrastructure to improving education and public transportation system and providing disaster relief. Federal income taxes are based on your income and filing status, and we talked about filing status a little bit in the last video. The same federal tax rates apply to everyone, regardless of where they live or work. And federal income taxes are collected by the federal government, while state income taxes are collected by the individual states in which a taxpayer lives. And there's a couple states, 1, 2, 3, 4, 5, 6, 7, 8 states don't have state income tax. So that's a couple percentages less of a bill that you're going to have, just of money that you're not going to have to do. What do taxes do? The government decides where the earnings go instead of you do. And again, Lowenstein wrote a book on taxes, and among his 6 books that I recommend you guys all read, and that's one of them. And it's called Ways and Means by this big picture of Abraham Lincoln. So Lincoln devised this tax system. And Lincoln, the Romans were taxing people. Remember the tax collector in the Bible? The tax collector from the Bible is considered the bad guy, right? The Christ sat with the tax collectors. Remember that story from the Bible? So taxes collected from individuals and corporations by city, state, and country where they reside or operate. When the taxes collected is credited to the government, it's referred to as federal tax. The U.S. government, the country's government. So governments use the money collected through federal taxes to pay for the growth and upkeep of the country. Some look at federal taxes as rent charged to live in a country, fee used to use the resources provided by a country. When you pay tax in the government, you're in effect investing in the economy, and the government uses the funds to do the following. There's a whole list of things here: Medicaid, Social Security programs, pensions for government workers, and infrastructure improvements, safety net programs for lower income people, uh, buying aircraft carriers and fighter jets and howitzer, long distance, field artillery, and improving education, health, agriculture, utilities, public transportation, and then certainly the space program, disaster relief. Okay, the federal taxes support all that. The government collected 4 trillion, and you guys know this, and spent almost 7 trillion, resulting in about a $3 trillion deficit. And again, you want to have those numbers. You want to have those numbers at the tips of your fingers, a lot of the time. That's for sure. The source of revenue for the federal government comes from income from its residents. IRS collected 3 trillion, and remember with the units, I think we spoke about this in class, and people said, "What?" I remember we talked about this week. 3.5 trillion or 3,500 billion. So trillion is 3 more zeros. So if you eliminate the zeros from the wording, you add the zeros to the number, right? So instead of 3.5, it's 3,500. And if this was millions, it'd be 3,500,000 million. If you wanted this in millions. So again, you got to learn how to, the units, the currencies, the commas, the periods, all that means a lot. In receipts of which individuals, estates, trusts contribute about 2 trillion of that. So income from residents. So yeah, that's the population, the individuals. It's most of it it's not the business. The businesses just pass it all to consumer, and they have a lot of pass through because the businesses are hiring people, they're developing, so the government wants to inspire the Microsofts and the Apples and the Googles and the Yahoos and all those kinds of companies to innovate, which develops industries, develops careers for people to work in the country. Okay, business income taxes accounted for about, only 264 billion. So you could do a ratio. I mean, you could do it with a trillion too, but if you did a ratio of 264 to this, it's about 10, it's about one tenth, right? This is about one tenth of 3,500 billion is, and even more. This would need to be 350 billion to be a tenth. So it's less. It's like maybe 8% or something. Special considerations: workers receive their earnings as net income, also known as the take-home pay. There's a gross pay also. Um, Net income is the total amount received after taxes, benefits, voluntary contributions are deducted from the paycheck. Remember the first time you got a paycheck and it was an actual check, it wasn't cash, and you looked through it and said, hey, there's deductions, there's this, there's that, right? I remember it very clearly in my life that the first time we got a paycheck for something. I was painting for the Jesuits in the summers. I was painting some of the buildings, but we were at a painting contract, and we painted some of the schools and the hallways and the steps and all that stuff, and did a lot of work like that. Net income is the total amount received after taxes, benefits, and voluntary are deducted from the paycheck. When taxes are withheld, it means the company or payer has paid the tax to the government on behalf of the worker. So again, you're sorting through your check, and then there's your part of your Social Security payment, the government's part of its the Social Security payment. So you have to, or the employer's part. So you have to, and we have those examples worked out just in our problem sets. So we have those are just a little bit later as we get. But the problems, just to make you guys aware, the problems are going to start out relatively straightforward, and then it's going to get progressively, it's going to get a little more challenging as we go. And it should be it should be that. So it means the company, the payer, has paid the tax to the government on behalf of the worker. Fine. And gross income includes the total amount of income the worker has paid the government what it's owed. Uh, some of this other stuff here, canceled debts are usually taxable. Um, Paycheck protection program loans provided during the COVID are exempt from federal taxes. Some states treat the forgiven amount as taxable income or deny deductions for expenses paid on the loan. So again, the tax code, there's a lot of complexity to it, and we're going to try to just make you aware of what that looks like. So the amount your employer withholds for taxes depends on how much you earn, and the information that you give in your W-4 form. All money earned, whether it's wages, salary, cash gift from an employer, business income, tips, gambling income, bonuses, unemployment compensation, constitutes income for federal tax purposes. The Trump case in New York was about this, where some of the employees were compensated with what do you call it? Tuition was reimbursed for the children of the employees of the Trump enterprise to go to, like, the northeastern private schools or something. And I don't think that was reported. And the more I look at it, there is a fair value to that, and that's considered income. And it says that here, cash gift from an employer. Is it a bonus? What is it? So and so maybe someone very at the surface said, hey, it's we're paying the tuition, so maybe they researched it a little bit, but I don't know. I mean, I haven't dove into that case directly, but it's a murky situation what that really is. But it looks like if there's a fair value, you got to pay taxes on it. That's how I see it. So federal income is built on progressive tax system, and we're going to look at that. So higher earners are taxed at higher rates, and we're going to go through that problem in a few minutes. The For 2022, the same tax rates apply, but the income brackets are changed. So yeah, I have, and here are the these are the instructions for 2021. Some of the IRS publications have 2022's bracket, but today we're just going to concentrate on 2021. I do have instructions here, and I you have to forgive me. I've not forgot, but trying to remind myself where yeah, that's instructions for 2021 is here. I think that's something else. Yeah, here's 2022. The numerics on the brackets are different, but these percentages are the same. But the dollar values here changed a bit. But for today, we're just gonna worry about 2021. Okay. So yeah, and also there's this thing called a marginal tax rate, which means just the tax rate you're in it's the tax rate that you're in the, I'm trying to say a 10% part means 10% of every next dollar. It's the whole next dollar earned thing. It's really it's the highest here. I'll say it like this: it's the highest federal tax rate that you're paying in is really what's considered your marginal rate. So the marginal rate means that 10 cents of next dollar will be taken as tax. And I was trying to say if you're at the end of that tax bracket, you could be starting to work in the next one, but I don't want to cloud it because folks. I'm telling you, I taught physics at Rutgers, engineering major, all this stuff, and it's not simple. The federal tax code is not simple. So state income tax versus federal. We distinguish between income tax and state income tax and federal income tax. The U.S. government at the state level may also levy income taxes in addition to the federal income tax. There's property tax, which is the county basically, and the municipality that you're in. There's a couple states that don't have any state tax at all. There's one, two, three, four, five, six. I don't know why I keep counting them, but I keep counting. Saying how many of these states are there really? So New Hampshire taxes dividends and interest income only, and the state will completely phase out these taxes by 2027. So, but yeah, I've said it for the International Finance Group. So, if folks, if you're working globally, what do you think you're doing? You're working on, you're working on taking advantage of the tax laws and our banking laws in another country, another jurisdiction, and you're doing that because there's a financial advantage to that. So there's a couple questions here. It says, what are the federal income tax brackets for 2021, 2022? There was one of these 8 brackets. It's funny. There's 8 states that don't take state tax. And there's 1, 2, 3, 4, 5, 6. There's 7. There's 7 tax brackets there. And we're gonna deal with those on our problem that's coming up next. On individuals, it's gonna be a single filer individual income federal tax computation, and it's like a little module, and we'll show you how to do everything with it. So it'll be good. Does Social Security count as income? Benefits are not counted as gross income. So, however, benefits are included in your combined income, which IRS uses to determine if you should pay taxes on your benefits. So, combined income is determined by totaling your adjusted gross income, non-taxable interest, half of your Social Security benefits. If you combine your income is between 25 and 34, you may be taxed up to 50% of your benefits. If your combined income is more than 34, you may be taxed up to 85%. I didn't realize that. So again, I don't have references to that in the tax code. And what I'm trying to do is with the problems, the reason I'm sort of around 87 right now, so I have another sort of maybe 50 problems to go. I'm trying to reference everything and where everything came from. And you can see, just to show you guys my folder, I'm expanding my IRS. There's more. I posted a lot of these, but not all of them. There's child care dependency, divorce situation, miscellaneous deduction, sale of assets, earned income credit, education taxes, moving expenses, on and on and on. This is healthcare. This is your healthcare savings account. So there's a lot of stuff here, and again, we're certainly not going to. This is not a tax course. We're not teaching it as a tax course. We're not going to completely go over the whole federal income tax code, but you'll have a lot of it. So, Social Security benefits are not counted as gross income. Benefits are included in your combined. Okay, we spoke about that already. Which country has the highest federal income taxes? These are just Japan, Belgium, Austria. Oh, that surprised me. Austria's got a high one like that. Okay. Yeah, these should have percentages in here. Right? I don't know why they don't. Right, so it's all similar. Yeah, Sweden. Aruba is interesting that they have such a high. Usually, those kinds of places try to have a low one to attract investment. Ivory Coast is 60%. Wow, that's in Africa on the West Coast. So, Lincoln started the federal tax income program in 1861. Want to finance the Civil War, so 3% tax was imposed on all annual incomes over $800 at the time. Well, folks, even 1861, the Civil War, NJIT came into existence about 20 years later. St. Peter's about 10 years later. St. Peter's was 1872, right? So we're is the governmental system started to form themselves. That's we sort of have all these things right happening: taxes, engineering school, all these other kinds of things. It was the Revenue Act in 18. We should look into that. And the federal income tax is generally due on the 15th, and it can shift because of weekends or holidays or something. And also, just something to keep in mind that I'm the woman who does my taxes, in addition to her St. Peter's connections. In addition to her St. Peter's connections, worked for the IRS and advised me to get my taxes done. And over, really, January and February, she's the busiest because most of her clientele, we're getting our taxes done in February or early March to avoid getting it in late or getting it in too close to the 15th. That's to her, that's a warning sign that there's a much higher chance of getting audited if you do a late return or a return very close to April 15th. Just keep that in mind. Okay, so what did we do today? We talked about two sets of we talked about the article, we talked about the federal income tax, and the last piece that we're going to work on today is someone who's making $80,000, unmarried, single, and we're going to go through the math. And this will be your second assignment, so just be aware of that. Your second assignment will be something like this. Okay, and here we go. Okay, it says, and I think this is big enough. 150. We'll do 160. Yeah. So this is a federal income tax example, and we're going to do 2022. Today we'll do 2021. Okay, for single. And if you notice here, this is going to be our little calculator, and we're going to fill the numbers in, and we're going to sort of, and really, I think putting a box around what it is that you're trying to do, I think always helps you. Okay. So if someone's making 80,000, so we can go to this little cell here, just type in 80,000. Okay. And we'll get rid of and you could, I'm using the keyboard shortcut, but you could just do fill, no fill is what I'm doing to get rid of the shading. I don't keep saying that, but that's your taxable income. And then we want to talk about the marginal tax bracket. We want to say, what's the federal tax bill for 2021, and then work on some percentages. So we're going to do all that. Okay, so now we're here with this, and let's just sort of clear this out just all at once. And we have a little comment here. We're gonna compute the effective tax rate, the marginal tax rate. We're gonna put the brackets in. Now, again, you should have some experience with typing this stuff in and putting the borders around it. You should be able to do all that stuff, right? But if you want to do a border, right here's all your borders. Just put a border in someplace, right? There's your border, right? And I'm saying what I did here is I went like this. I just went over the whole thing and did a whole border, right? There's your outside border. That's it. That's what I did. And then built all these other little borders inside as you go along. And I think in class we spoke the last video, we spoke how to type everything in. So you should be able to do all those things. Okay. Like I said, I don't keep typing these tables in. Okay. Obviously we have the answers here, but let's work from here if we can. Okay. Just to what do you call it? Just to have the practice of doing this. So for now, what I'll do is I'm just going to overwrite that like that. Okay, so we can see it. So this first one's going to be, this will be 0 and 9,950, right? That's the first one. And as I've recommended to you guys, you want to remember in class, you want to increase by 1 the next bracket to 40,000. 40,525. This would be 40,526, right? 86,003. And again, you've got to work steps. You got to work in steps. 86,376. 164,925. 164,926. 209,425, 209,426, 523, 6. So your assignment's going to be up there. It's going to be a higher number. It's not going to just be 70,000 or something. We're gonna make you figure out 250,000 or something like that. And this is over 523,600. Okay. Now again, this is a PDF. Here, this is again. These are the instructions for 2021, and also we want to put all the tax bracket. The 7 tax brackets in. We want to do that also. Okay, so those brackets are going to be again. They're all right here. 10%, 12%, 22%, 24%, 32%, 35%, 37%. Okay. So we typed in that stuff. And now we're going to figure out, what, you're making 80,000. Okay, you're making 80,000. So actually, so what we did down here, I said equal sum, and we're just going to sum this whole area. There's nothing there now. Okay, but we're going to fill in. So the first bracket says, okay, you're gonna pay taxes on 9,950. Okay, and actually even better than that, this minus right there. It's the ending point minus the beginning. Now for this next one, because we changed this to 1, just for sort of visual purposes, I'm gonna say equals 40,000 minus 9,000. So the 12% tax is 30,000. And if you look at this counter that we had, or the summation formula down here, we're adding up until we get to what number? Until we get to 80,000. So now we're only up to 40,000, right? This. Those are all, and this is an equal sign and sum and a colon in between. And this is the first cell. This is the last cell. See 30 to 36? That's line 30 to line 36 in column double A. That's what that means. Now this next one is going to be equal to 86 minus 40. That's 45. So now here we're in this the third range here, the third bracket. Now we're to 86, which is too much, right? So what we're going to do is, instead of 86, we're going to overwrite that. That'll be 80, right? And you hit return. So yeah, so if this whole thing is about 46,000, this is 39. So you're not using that whole entire bracket. Now you're up to 80,000. Okay. And then, also what you can do is you can reduce this to just, I always recommend that you do that, so you don't have this referred to cells that aren't really involved in the computation. So God forbid something goes wrong. Okay. And now the tax rate is going to be, it's the product, right? It's really just the product of those two, right? That's just the product. You could do it like that, equals product of those two cells of that array. That's one way to sort of look at it. Okay, I left off the the decimal. If you put some decimal in, you would get a little 0 or whatever it is, but don't worry about that right now. The next one, you can say Control D, right, and then Control 1 for the formatting. Because you don't want a dollar sign for every line, because it's just sort of well, really the SEC tells us to not do that. So you took 12% times the 30,000, and then the last one is going to be 22% times 39, and then you're going to flow down to the bottom here, and you're going to do the same. You're going to do the same computation. So we could just say copy, paste formula, and just brings the formula over. So our taxes are we're paying $13,350 on $80,000 earning or taxable income in 2021 for a single taxpayer. Okay, and your marginal tax would be the 22. See what it says? Marginal tax rate 22. The effective rate is the ratio of what you're paying in tax to your taxable income, which is, see, that's just the ratio of tax at each rate, the summation of 13,000 over 80,000. Okay, this is 16.7. So I don't know why I have 16.5 in here. I don't know why. It really should be 16.7. That matters. You shouldn't be off by that much. I don't know why that's in there, but there we go. We fixed it. Okay, that's the effective tax rate. Okay, so this, again, this little calculator, folks, this is what we want you guys to have some experience in dealing with. Okay, so you have your ratios here, you have your tax rates here, you have what's taxed in terms of the taxable income at each rate, and then this is your marginal rate, this is your effective rate. And like I said, so the next video we'll go to 22's brackets. We'll do that. We'll talk about taxable income, and we'll do another Wall Street Journal article. So this video is a little bit shorter. Okay, but there you go. This is what we're talking about today. Okay. Okay, folks. Again, so more videos to come. We have the micro or the macroeconomic video coming. We have that on the way. So we have a lot of things for you guys to look at. Thanks so much.